might be some of the words that traders use just based off the fact that we moon so hard. In this video, we're going to be looking at stocks, cryptos, as well as different indicators that give us possible insight from a technical perspective of where we go from here. And if you're more interested on a fundamental perspective, I'm going to be creating another video talking about basically the economic news that came out this week, as well as earnings report, and how that could either propel us forward or draw us down from this point that we're currently at. But without further ado, let's go ahead and cut that bullshit and jump straight into it. So as everybody knows, the SPY had an insane week this week. It was up 4.3%, and mainly due to economic news, the beats basically on what the consensus was. Not only that, but as well as earnings reports that were just insanely good. So as everybody's drawn, basically we had this falling wedge pattern. Basically we broke out of it on decelerating volume, fell on even more decelerating volume, retested it, as well as hit this support level at 389.50 level, and ended up launching to the upside once again because of economic news as well as earnings reports. At this area, we're currently at a supply zone. The most important level, in my opinion, on the SPY at the moment is this 415.50-ish level, as it could give us insight on whether we reject from here, creating a double top, or possibly even launch past it, allowing us to get out of this downward trend and possibly head to the upside and even potential all-time highs. Am I predicting that? No, I'm just saying that could give us the whole narrative in which people might even flood back into the system, knowing that we possibly hit a bottom. Also, if we look at different indicators, first of all, we're staring at the RSI levels. Currently, we could actually be hitting into this overbuy area, so something to keep out for, and we haven't done that since November of 2021. Take note of that, guys. Not only that, but if we look on the smaller time frames, like the 4-hour, we actually are oversold already. So that's interesting because, again, we haven't been there since March 2022, and before that in November time. So the last time we hit it was on this insane rally, ultimately selling off again. So will we sell off again, or will we continue to propel forward? And not only that, but on the 15-minute time frame, the smaller time frames, we see this negative divergence, which possibly could lead us to believe that we would see some type of pullback in the earlier on in the week or throughout the week, just to digest what exactly happened this whole entire week, because it was an insane move to the upside. And if we go back to the daily time frame, I'd like to look at some other indicators as well. First of all, let's go ahead and look at the standard deviation channel on the daily time frame. And there's only been 2 other times in which we've been into this area before: once, twice, and 3 times. And if you are expecting us to continue this downtrend and create once again fallback from this area, this might be something to add to your confidence in that. The fact that we are overextended to the upside past the second deviation, we're running into the supply zone. The volume profile isn't pulled up at the moment. However, it is the highest point on the volume profile is at this 415-ish area. Not only that, but again, the RSI is reaching overextended areas. We are seeing these bearish divergences. So it's just all adding to a plan that you possibly could see either a consolidation period or a pullback at this area. And we also look at the anchor VWAP deviations. We are approaching the 0. In March, we actually passed the 0 and went to the positive 1. However, since we are in a downtrend, I won't say safe to assume that we're going to continue the downtrend, but it's basically going to be that way until proven innocent. And if we also look at the individual sectors of the actual SPY itself, the top 4 ones, the top 4 holdings, we're going to look at XLK. On XLK, we actually passed that previous high because Apple had great earnings, Microsoft had great earnings, and those are 2 biggest components of the XLK. However, we are still in the supply zone. Again, there's support that was here in the past, support here in the past, chop around here, and basically we could be heading into this area, so it'd be nice to see how it reacts at that area. Not only that, but the XLY, which is consumer discretionary, mainly has Tesla as well as Amazon. We are hitting this upper region once again. 1, 2, 3. Could this be the 4th touch in which we pull back down from? Who knows? Not only that, but we also look at healthcare. We had this inverse head and shoulders pattern, which is bullish. However, this 134-ish area has acted as resistance, support, resistance, support, resistance, support, and resistance in the past. So this is a really significant level to watch to see if we break to the upside or if we continue this downward move. Another thing to look at is the XLF. Again, they have this downward trend. 1, 2, 3. And possibly the 4th touch, as well as this also coincides with the resistance level, this 33.85-ish level. So again, we could see this consolidation period or a pullback in order to digest all the economic news and this crazy movement we had throughout this week. We also look at QQ. Basically, the analysis is the same. Possible double top, volume profile likes this region right here, resistance, supply zone. The one thing that's different is this rising wedge-ish pattern that we have. Price action was wide at the bottom and it's tightening here at the top, heading into the upper range of this possible channel. So it'd be interesting to see what exactly happens. Not only that, but again, oversold territory on the standard deviation channel. If we look at the volume profile, once again, it is hitting that area in which is the highest peak on this actual shelf. The RSI is saying it oversold in smaller time frames, divergences, so on and so forth. So let's go ahead and look at something that's new. If we look at the top 5 holdings of the SPY and the QQ, which are the same, however, for the SPY, it's 21% of the SPY. For the QQ, it's actually 42% of the SPY. I mean, the QQ. If we look at Apple first, Apple had great earnings and actually passed the supply zone that I was looking for there to be some type of decision. It made its decision. However, it would make sense to digest this because we've been just basically shooting straight up ever since the bottom. We're actually up pretty significantly from the bottom. What is that? Almost 27%. That's ridiculous, guys. So it would make sense in order to get some type of downward movement such as here, or even get some type of retest of the supply zone in order to continue propelling forward. Also, Microsoft, we're hitting the supply zone. We're currently there at the moment. This 280-ish level would be interesting to see. It technically did close above it. However, once again, we have all these resistances pulled up basically because of this chop, as well as support has acted in the past. Amazon, once again, that's kind of the same thing. There's 3 major times in which it acted as support. Currently, we're hitting it as resistance. There was an indecision candle, doji. I think it's called like abandoned baby or some bullshit like that. Honestly, I have no clue. But again, we're in this supply zone and we're going to get some type of decision, either break to the upside or break to the downside. It would make sense to get some type of retest ultimately before launching forward. Tesla, I don't have any lines drawn here at the moment, but it's kind of the same thing. I mean, we have this resistance, chop in this area, resistance. I mean, support, excuse me. This was resistance over here. And we're heading into that area now. So what will we do? Who knows? Google, we're in that supply zone. This whole chop, there's a whole bunch of indecision in this area. It's been just chopping to the upside, chopping to the downside, chopping to the upside, chopping to the downside. And even in the past in this area, it has done the same thing too. So it's just going to be interesting to see how all this reacts to that. If we move on to crypto, crypto is related to a lot of the risk on assets, specifically to the QQQ. They've been correlated before. And it's just interesting to see what's going to end up happening, because each time we had these higher highs, higher lows, ever since the previous peak in November, we've basically been breaking down from it here, broke down from it, broke from here, broke down from it here, broke down from it. So will we actually propel forward, or will we ultimately just hit this area, this 23800 level, and ultimately break down to the bottom of the channel, or ultimately break down to the downside if we do see a significant move down? Who knows? But however, it's in crypto, one of the most important things in my perspective that's going on at the moment is Ethereum switching from a proof of work to a proof of stake system. There's been a whole bunch of news around it, a whole bunch of news coverage on it. So right now, Ethereum's been performing better than Bitcoin has, their pair itself, as well as price action, how much it's actually gained ever since the bottom, and it's been leading the front. However, we're currently at this 1700 level, which has been a major area of support in the past, so now it will be a major test. Currently it's currently flagging at this area, so it'll be interesting to see what exactly happens. However, once again, this was support here, and it was support during the summer lull that we had in the past, and it chopped around it and back in early 2021 as well. So it'll be interesting to see what exactly happens here. So we're coming up against resistance on cryptos, on the SPY, on the QQQ, as well as the major holdings of each, whether it be the sectors, whether it be the actual individual components. It's just going to be interesting to see what exactly happens this week. Will we get a pullback, or will we ultimately go to the upside? The other indicator that we want to look at is the VIX. The VIX has been good at marking tops as well as bottoms. Whenever it hit the top of this, I guess you call it a wedge that I have drawn out here, it's actually marked bottoms, and whenever it hit the bottom of this wedge, it's marked tops, as it is the inverse of the SPY. It's supposed to be the volatility index, letting us know how much volatility will we see in the next 30 days. However, it acts more as an inverse ETF, if we're being honest. So again, we tapped it here, marked the top, tapped it here, marked the top, tapped it here, marked the top. We tapped it here at the bottom of this trend line once again, the fourth touch. Will it break this trend line, or ultimately hold and mark a top here? Who knows? And I'm not saying it's going to be an ultimate flush down. Maybe it's just a slight pullback. Maybe that's it ultimately before breaking the channel, if we do see an upward movement. But I am calling for some type of pullback or some type of consolidation period early in the week, or just the whole week in general, as we had an insane move to the upside. Put to call ratio, this one's a little bit less accurate in calling tops and bottoms, in my opinion, at least the way I've been using it, as I've been following this trend line that has been building up into. However, we're in the middle of no man's land of the range, and we're not even touching the trend line, so it's not really giving us too much information. Another thing I want to look at is the yield curves. US 10-year versus a 2-year. We've been inverted ever since July 5th, and we're about to approach a hard inversion here soon. I don't know if it's 30 trading days or if it's 30 total days, but after that point, it is a hard inversion. So it'd be interesting to see what happens then. But if we also look at the 10-year 3-month, which is the Fed staple, supposedly that's what they call it, we're been declining rapidly and fast ever since May. So will we end up inverting on this one? And at that point, the whole recession talk, whether we are or not in one, this is going to be the defining factor, in my opinion, whether people believe it or not. Because some people say that we are currently in because we had two consecutive quarters of negative GDP growth or contraction or whatever you want to call it, while others are saying that it's not, due to the labor market or the consumer or some other type of readings that they're looking at. But to me, I think we are in a technical recession. We're not in an actual recession, but once the labor market gives and consumers stop spending so much, then at that point, I'm gonna feel more confident calling it a recession. The last thing I want to look at is crude oil futures. Fundamentally, I don't know why it's been going down, other than the fact that people have been pricing in the fact that we possibly might see a recession, which we actually got the 2 consecutive quarters, which some people were hoping for. That's why we've been going down. But from a technical perspective, once again, we have bounced off of this 93-ish area. We've seen a nice little hold but we've been chopping around at it between that as well as the $100 level. Will we ultimately break to the upside? That's something to see. I'd like to see some type of significant close on volume above 100 in order to start feeling more bullish on crude oil futures. And at that point, we could see oil prices continue to the upside. However, it is currently holding at this 93-ish area. And again, just to let people know, this is what I've been told, and I've kind of seen it in the price action. But basically, if this is 2 weeks ahead of what we do see in the actual pump. So if we see further decline, then we could see further gas prices declining. But if we see further uptick, then we could see gas prices to start hitting the pumps higher and higher each time we do try to fill up. Some economic data in order to look at for this week is the job openings. People are going to report how many job listings there actually are. Not only that, but the unemployment change, which is going to be coming out on Friday. Non-farm payrolls, unemployment rate, employment change, average hourly earnings. And this data, what to look for is in the employment change, unemployment rate's 3.6% at the moment. Will it uptick? Who knows? Also, average hourly earnings. How many hours are people actually putting in? It'd make more sense to see a decline in hours first, ultimately before we start seeing layoffs. And apart from that, the whole PMI that's going to be happening earlier in the week as well. I think it's Monday is the manufacturing, and they have another one that's going to be coming out for PMI as well. I forgot what was that. Here, services. There you go. On Wednesday as well. So be mindful of these numbers. Look forward to that, guys. But apart from that, that's all I basically got. So good looking on trading and good looking into the rest of this year, as the Fed is going to go to sleep and not going to be coming back until September time. So see you guys later.